Hi, this is your math teacher with your first economic report on bank lending practices. The Board of Governors of the Federal Reserve System put out an article on the second quarter lending practices. The July 2020 Senior Loan Officer Opinion Survey on bank lending practices addressed changes in the standards and terms on and demand for bank loans to businesses and households over the past 3 months, which generally corresponds to the second quarter of 2020. Regarding loans to businesses, the respondents to the July survey indicated that, on balance, they tightened their standards and terms on commercial and industrial loans to firms of all sizes. Banks reported weaker demand on C&I loans from firms from all sizes. Meanwhile, banks tightened standards and reported weaker demands across all three major commercial real estate loan categories: construction and land development loans, non-farm residential loans, and multifamily loans over the second quarter of 2020. Major net shares of banks that reported reasons for tightening lending standards or terms cited a less favorable or more uncertain economic outlook, worsening of industry-specific problems, and reduced tolerance for risk as important reasons for doing so. Significant net shares of banks also mentioned deterioration in the bank's current or expected capital position, less aggressive competition from other banks or non-bank lenders, decreased liquidity in the secondary market for C&I loans. Major net shares of domestic banks tightened standards of all three CRE loans categories over the second quarter. Meanwhile, major net shares of domestic banks reported weaker demand for all three CRE categories during this period. Similarly, major net shares of foreign banks tightened standards on CRE loans and reported weaker demands for such loans. For loans to households, banks tightened standards across all categories of residential real estate and across all three consumer loan categories: credit card loans, auto loans, and other consumer loans. Over the second quarter of 2020, banks reported stronger demand for all categories of RRE loans and weaker demand for all categories of consumer loans. Banks also responded to a set of special questions inquiring about the current level of lending standards relative to the midpoint of the range over which banks' standards have varied since 2005. Banks on balance reported that their lending standards across all loan categories are currently at the tighter end of the range of standards between 2005 and the present. Over the second quarter, major net shares of banks tightened standards for all RRE loan categories except for subprime residential mortgage loans, for which a significant net fraction of banks reportedly tightened lending standards. Regarding demand for RRE loans over the second quarter, a major net share of banks reported having experienced a stronger demand for GSE eligible residential mortgages, which means government-sponsored enterprises, such as Fannie Mae and Freddie Mac. This means that they are privately owned but receive support from the federal government and assume some public responsibilities. Significant net shares of banks reported having experienced stronger demand for most of the remaining categories of RRE loans. Demand was reported weaker only for home equity lines of credit. Over the second quarter, major net shares of banks tightened lending standards on all categories of consumer loans. Major net fractions of banks are also tightened important terms on credit card loans, including credit limits and minimum credit scores required. In contrast, a modest net share of banks reportedly reduced the minimum percent of outstanding balances required to be repaid each month. Meanwhile, significant net shares of banks tightened most surveyed terms on auto loans. Regarding demand for consumer loans over the second quarter, a major net fraction of banks experienced weaker demand for credit card loans, and significant net fractions of banks experienced weaker demand for auto and other consumer loans. Essential questions. What plan can we prepare if we want to apply for a vehicle, residential, or commercial property loan? Before applying to any lender, a few simple things we can do is ask if there have been any changes to the requirement of the loans, such as a credit score increase or a down payment increase. Compare different lenders and find out which will be the best choice for your financial situation. If you found this content useful, please subscribe to my channel and hit the like button. I look forward to serving you. If you want to check out this article, go ahead and click the link below in the description box.